News article 1 Dow Jones Futures. Stock market skids into Fed. Amazon rises late as AMD. Supermicro fall. The market rally stumbled ahead of the Fed meeting. Amazon and AI play Supermicro and AMD reported earnings late. Amazon, AMZN, reported first quarter earnings that topped Wall Street estimates on the top and bottom lines, sending shares of the retail giant up as much as 5% in after-hours trading. Powered by a strong showing from its cloud computing segment, Amazon continued a wave of big tech results that have mostly wowed Wall Street, even as investors turned their focus to the conclusion of the Fed's May policy meeting on Wednesday. The company touted that its industry-leading ORS business is on course to generate $100 billion in revenue annually. Here are some of Amazon's most significant metrics in the company's fiscal first quarter, according to data from Bloomberg. Net sales, $143.3 billion versus $142.6 billion expected, $127.4 billion in Q1 2023. Adjusted earnings per share, 98 cents versus 83 cents expected, 31 cents in Q1 2023. Amazon Web Services, $25 billion versus $24.1 billion expected, $21.4 billion in Q1 2023. Advertising, $11.8 billion versus $11.8 billion expected, $9.5 billion in Q1 2023. CFO Brian Olsavsky said overall CapEx is expected to meaningfully increase this year, compared to the nearly $50 billion in 2023, driven by higher infrastructure costs to support growth in ORS, including generative AI. The quarter's $14 billion in CapEx is expected to rise for future periods. Olsavsky said, Amazon is seeing strong demand on the ORS side, with customers signing up for longer deals with bigger commitments, many with generative AI components, he said. Amazon's report arrived a week after its cloud rival and AI competitor Microsoft, MSFT, posted an impressive quarter, beating expectations on the strength of its cloud computing business. The market cheered even louder for Google parent Alphabet's GOOGL results, which outperformed on the top and bottom lines and came with an announcement of a new dividend, the latest in a trend among tech giants. Amazon, which has positioned itself as an AI leader, is another player in the race to claim market share and launch new consumer services. In March, Amazon increased its investment in the AI startup Anthropic, pouring in another $2.75 billion to bring its investment total to $4 billion. Like its competitors Microsoft and Alphabet, Amazon is wielding its heft in its cloud computing business to gain an edge in the nascent AI market. AI tools require huge amounts of data and processing power to train and run large language models and their applications, relying on cloud providers to supply vital infrastructure. Amazon stock, which joined the Dow Jones Industrial Average, DJI, in February, is up about 20% for the year. Tesla-related news article 2 update 1 Musk disbands Tesla EV charging team, leaving customers in the dark. Detroit, the 30th of April, Reuters. Elon Musk's abrupt decision to lay off employees who ran Tesla's electric vehicle charging business blindsided automakers gearing up to equip new EVs for customers to use the Tesla Supercharger network, industry officials and analysts said on Tuesday. For now, General Motors, Ford and other automakers which struck deals last year to give customers access to the network said they are not changing their plans. Tesla's decision to open its network to rival EV manufacturers was hailed by U.S. President Joe Biden, and opened the door for Tesla to get federal subsidies to expand the reach of its North American charging standard, NACS, system. Musk's decision, as reported by The Information, to dismiss the head of the business, Rebecca Tenoxie, and most or all of the staff that operated and maintained the system left officials at automakers and Tesla suppliers uncertain about the future. Tesla did not immediately respond to requests for comment. Musk subsequently said on X that the carmaker still plans to expand the supercharger network, just at a slower pace for new locations and more focus on 100% uptime and expansion of existing locations. Andres Painter, co-CEO of Bullet EV Charging Solutions, a supplier to the network, said, "As contractors for the supercharger network, my team woke up to a sharp kick in the pants this morning. Tesla has already been awarded money under the federal government's NEVI program," he said, referring to the National Electric Vehicle Infrastructure Formula program to provide funding to states to deploy EV charging networks. "There's no way Mr. Musk would walk away from effectively free money. It may be possible Mr. Musk will reconstitute the EV charger team in bigger, badder, more Muskian way." GM and Ford, in separate statements, said they are not changing plans to equip their EVs with connectors that will allow drivers of Chevrolet, Cadillac or Ford brand EVs to recharge at Tesla stations. "We have nothing new to announce regarding our plans," GM said. "We are continuing to monitor the situation regarding changes to the supercharger team and the potential impacts with no further comments or updates at this time. Nothing is off the table." Some industry executives and analysts said Musk could have disbanded the existing supercharger organization to build a leaner and less expensive team to run the operations. However, Musk made clear in a call with analysts earlier this month that he is focused on opportunities in artificial intelligence, robotics and autonomous robotaxis. In this layoff, nothing is off the table, Wedbush Securities analyst Dan Ives said. Musk is trying to send a signal internally that the difficulty that Tesla is going through, they are going to have to make tough decisions. It shows there is serious cost focus. Tesla last week reported lower first quarter profits and its first quarterly revenue declined since 2021. Even after a surge over the past week, Tesla shares are down 22% for the year, with sales of Tesla's EVs falling and profit margins under increasing pressure. Musk could be cutting supercharger network spending to conserve cash for other projects with more growth potential, analysts said. Tesla is looking to right-size its capital spending and operating expenses over the next couple of years as the company is in a slower growth phase, Morningstar analyst Seth Goldstein said. More traditional automakers might hang on to a business that promised steady revenue and near-continuous data exchanges with customers, analysts said. But Musk could take a Silicon Valley entrepreneur's view that charging is a legacy business that could be streamlined or even divested. "My guess is that now that the industry has adopted the NACS standard, he views supercharging less as a strategic moat and more as a cost center," said Casey Boyce, a vice president at data analytics firm Escalent. The Tesla supercharger network could have significant value if Musk wanted to sell it, analysts said. Rival U.S. charging networks have struggled with reliability problems and do not have the scale or prime locations. Tesla News article 5 Tesla stock drops. Here's why its massive run is ending. The EV maker has dismissed 2 directors and cut its supercharger team, according to a media report. Mohamed El-Erian named 3 key risks that will determine where U.S. growth is headed in 2024 through 2025. That includes changes to the Fed's inflation target and low-income consumer spending. Investors will also watch for a balance between technological innovation and geopolitical tension. If Wall Street was wrong about recession odds in 2023 and 2024, forecasting for next year won't be any easier, Cambridge economist Mohamed El-Erian wrote in Project Syndicate. In his view, chances of a U.S. soft landing scenario still remain strong for the near term, but there are 3 key risks that will determine how likely this really is. First, all eyes are on the Federal Reserve as to whether it will double down in its 2% inflation chase, or if it can live with a slightly higher rate. According to El-Erian, the central bank's fixation on this figure could trap it between a rock and a hard place, in the case that U.S. growth starts slowing before the target is reached. In fact, the first quarter is already showing signs of this, with the latest GDP reading declining markedly against hotter than expected inflation. That has led to stagflationary alarm on Wall Street, a situation the Fed could only combat by hiking interest rates higher. Since last year, El-Arian has warned 2024's inflation would get stuck between the 3% minus 4% mark, and called on the Fed to readjust its target a percentage higher. Otherwise, the central bank risks crushing the economy to achieve its goal, he's said before. Second, America's growth trajectory will also depend on consumer spending, but especially among lower-income households. Though U.S. consumption has generally stayed strong, lower-income brackets have taken the brunt of a declining environment. The cohort is increasingly strained by higher debt and eroded savings. Given high interest rates and some creditors' loss of enthusiasm, this cohort's willingness to consume will hinge on whether the labor market remains tight. El-Arian wrote. Third, U.S. growth is at the mercy of where the broader narrative goes, which could either mean an innovative boost or an international rupture. While technological advances promise a new favorable supply shock that could unlock higher growth and drive down inflation, geopolitical developments could do the opposite, as well as limit the scope for macroeconomic policy, he said. For instance, while technology such as generative AI and sustainable energy could mean transformative growth for at least a few years, international strife could spark stagflationary instability, such as in the case that crude surges over $100 a barrel. El-Arian wrote. Tesla News Article 6. These stocks are moving the most today. MicroStrategy, Eli Lilly, 3M, PayPal, GE Healthcare, F5, Tesla, Chegg, Supermicro, and more. MicroStrategy falls sharply after reporting a steep first quarter loss. Eli Lilly tops earnings estimates and rises full-year guidance, and Tesla shares decline after surging 15% on Monday. Amazon.com, AMD, and Supermicro Computer are scheduled to report earnings after the closing bell Tuesday. Bloomberg, shares of online education firm Chegg Inc. were on track for their biggest drop in about a year as competition from AI tools led Wall Street analysts to downgrade the stock. Jefferies analyst Brent Thill wrote in a note to clients that the company is spiraling with no stability in sight. He cut Chegg's shares to underperform, from hold, and questioned whether the company can build an AI experience that is meaningfully better than what students can get for free. The shift came after the firm's results Monday, which included a revenue forecast that was below consensus. The stock was down almost 30% after midday in New York on Tuesday, which would be the most since May 2023, and was poised for the lowest close since 2016. Peer Coursera Inc. tumbled as well. The declines showed that while artificial intelligence has been a boon to companies like Nvidia Corporation, for others it poses a threat. We find it difficult to believe that fundamental momentum will return to the business, Thill wrote. At Craig-Hallum, meanwhile, analyst Alex Furman also cut his recommendation on the company to hold from buy. Chegg, which offers online homework help services, on Monday forecast net revenue of $159 million to $161 million in the second quarter, while the average estimate of analysts surveyed by Bloomberg was $174 million. It also announced that Chief Operating Officer Nathan Schultz will take over as Chief Executive Officer on the 1st of June. In prepared remarks Monday for the company's earnings call, current CEO Dan Rosensweig said the firm is seeing encouraging signs of how our new AI-enabled platform will serve more students. Chegg has embraced AI, although the transition will take time, he said. Chegg's shares were down 37% year-to-date as of Monday's close. They were battered last year as well, losing nearly half their value in one day in May after the company said OpenAI's ChatGPT threatened the growth of its homework help services. Chegg, based in Santa Clara, California, has trained its own large language models with proprietary data and question-answer sets, which it believes are more accurate than alternatives, the analysts noted. But the AI wave presents a truly credible free product experience as an alternative to Chegg's paid subscriptions, they wrote. Tesla news article 7 Tesla lays off more workers. 2 senior executives out. Report Tesla is reportedly cutting additional jobs and 2 more top executives are gone after the electric vehicle giant slashed its workforce by 10% earlier this month. The information reported that Tesla CEO Elon Musk sent an email to executives on Monday evening informing them that Senior Director of EV Charging, Rebecca Tenoxie, would be leaving the company on Tuesday, along with nearly all of her 500-person strong supercharger team. Tesla's Director of Vehicle Programs and New Product Initiatives, Daniel Ho, is also out, along with his entire staff. The report said, "It is unclear how many people worked in that division." The company's public policy team, which was led by former executive Rohan Patel, will also be dissolved. The report said, Elon Musk's full self-driving FSD software a really big deal. Hopefully these actions are making it clear that we need to be absolutely hardcore about headcount and cost reduction, Musk wrote in the leaked email. According to the information, while some on-exec staff are taking this seriously, most are not yet doing so. Tesla did not respond to Fox Business' request for comment. The report comes 2 weeks after the electric vehicle giant confirmed it would reduce its workforce by more than 10%, trimming its roughly 140,000 headcount by 15,000. Last week, thousands of Tesla workers in California and Texas were informed they were out of jobs. The company disclosed alongside the layoffs that its senior vice president of powertrain and energy engineering, Andrew Baglino, had left after an 18-year stint at the EV maker. Musk says Tesla's affordable EVs coming next year in a separate report Tuesday. Electrek criticized Tesla's move to get rid of its supercharger team and Tenoxie, whom it credited with convincing rival manufacturers like Ford and General Motors to adopt Tesla's NACS plug for EVs. Tesla is grappling with falling sales and an intensifying price war, which led to its quarterly revenue falling for the first time since 2020, the company reported last week. Musk made progress toward rolling out Tesla's advanced driver assistance package in China, the epicenter of the EV price war, during a surprise visit to Beijing on Sunday. That trip came just over a week after he scrapped a planned trip to India, where Tesla has long sought to start operations. Due to very heavy Tesla obligations, Tesla news article 8 Stellantis and Volkswagen are off to a slow start after the EV king, Tesla Inc. Nasdaq, TSLA, reported its biggest revenue drop since 2012, along with a sinking profit. Stellantis NV, New York Stock Exchange, STLA, and Volkswagen AG, OTC, VWAGY, followed by reporting disappointing first quarter financials that reflected lower sales and higher costs. Plummeting sales and profit made the once almighty Tesla promise more affordable EVs are coming early next year, if not later this year. Despite a slow start of the year, both Stellantis and Volkswagen have maintained their full-year targets. Despite disappointing Q1 results, Stellantis is betting on its new products portfolio. For the January-March quarter, Stellantis reported revenue contracted 12% to €41.7 billion, which adds up to about $44.6 billion. Stellantis results were weighed down by lower volumes, along with an unfavorable product mix and foreign exchange dynamics, with the European region performing worse than expected, in terms of volume, price and product mix. Moreover, shipments in North America, Stellantis' largest market, also contracted 20%. EV unit sales rose 8%, but consolidated shipments overall dropped 10% to 1.335 million units. CFO Natalie Knight attributed the drop in shipments and revenues to the transition to the group's new product portfolio, which will be based on new platforms. To prepare, Stellantis was reducing inventories to reinforce its strong relative pricing ahead of its new or mid-cycle product launches, including Ram 1500 truck that is out already, and will be followed by low-cost EV Citroën EC3. Peugeot E3008 EV SUV and Jeep's Wagoneer S. Stellantis plans to launch 25 new models this year, out which 18 are EVs. Stellantis is quite confident about its new lineup as it reiterated its full-year guidance that includes double-digit margin on adjusted operating income and a positive industrial free cash flow. Despite a slump in profit, Volkswagen confidently maintained its full-year targets. Due to weaker demand for its premium brands that triggered a drop in sales, Volkswagen reported its profit plummeted 20%. For the first 3 months of the year, Volkswagen reported an operating profit of 4.6 billion euros or $4.9 billion, as it was also hit by an unfavorable country, brand and model mix, along with higher fixed costs. Vehicle sales dropped 2% to 2.1 million units, but Volkswagen also reiterated 2024 financial targets that include a revenue rise of 5%, along with a full-year operating margin in the range between 7% and 7.5%. Tesla news article 9 Why Tesla stock flopped 5% on Tuesday, up again, down again. Tesla, Nasdaq, TSLA, stock, the world's fastest electric roller coaster, tumbled 4.9% through 12:30 p.m. ET Tuesday, giving back 1/3 of the 15% gains it collected yesterday after announcing Elon Musk was meeting with China's premier to discuss FSD self-driving technology. And the reason for today's reversal? Tesla is laying off all workers on its uber-popular Tesla Supercharger EV charging team. What Electrek said about Tesla: the fact that Tesla is making job cuts, laying off 10% of its workforce in response to a sharp slowdown in sales, is no secret. But as electric transportation website Electrek reports today, new layoffs include senior executives and longtime veterans, as well as the entire supercharging team. That's 500 more employees gone. And these include Rebecca Tanucci, Tesla's senior director of EV charging and the person responsible for arguably Tesla's biggest win of last year, signing up all other carmakers to use Tesla's NAC charging standard for their own electric cars. Is Tesla stock a sell? Tesla investors are rightly worried by the development, which seems to imply that Tesla is slowing its rollout of supercharging stations, limiting its potential to grow as a provider of charging services. Up until now, as Electrek points out, Tesla seemed on course to become the gas station of the future to the entire auto industry, collecting billions in government subsidies along the way. Instead, Musk is voluntarily giving up his advantage, which feels like a gigantic unforced error. One could argue that Tesla has already won the charging game, now that everyone else has agreed to adopt Tesla's NAC technology as the standard for charging. And one could say this is a mission accomplished situation, that the supercharging team is no longer needed, and so there's no downside to laying them off. But this seems a crummy way to reward success and loyalty to Tesla. I can't imagine it will do anything good for employee morale. I can't imagine that will mean anything good for Tesla stock, either.